Hello, my name is Helena S. And I teach all the subjects from kindergarten to grade 9. And then I also did history, economics, business economics for 10th to 12th grade. Today, I will focus on economic management science, especially on the balance sheet, the terminology that's included there, and why we need to study it. I am a dynamic tutor because I apply everyday life experiences into my classes so that our students can understand why they need to study this and help them to grasp a better view of the economy. So, are you ready? Let's get started. Hi, and you may know me as Teacher Alma, and today we are going to learn about the balance sheet. You might ask, why? Well, I'm going to show you a short video clip from Warren Buffett. He is the top 10th billionaire in the world. He's 95 years old. And he just recently retired from his company as CEO in April at the age of 94. Let's get started. I'm just getting the video for us. Can just hold 1 second. Here we go.
What advice would you give to a young investor today?
Well, you've got to understand accounting. You've got to. That's got to be like a language to you, and so yeah, you have to know what you're reading. I mean, and unless you know that language, and some people have more aptitude for that than others. And that's one thing I learned by myself. Now I took courses in it afterwards, for example, but I learned it myself in it.
There we are. His company, Berkshire Hathaway's stock price is $700,000 for one stock. And if you convert that, it's nearly 14 million rand. So that's why we need to learn, because we need to know how to analyze financial statements, especially if you want to invest. We've got apps like eToro that shows you how to invest. They do it automatically, but you need to understand the basics of it. And I'm here to teach you this. And here is a financial statement that I've downloaded earlier this week. And this is the financial statement of Apple, the Apple phone, the MacBook. And this is the Form 10K. It's a quarterly report that I need to upload to the Securities and Exchange Commission of the US. That's the regulatory body for companies that's being listed on the stock exchange, a listed public company. Now, when we go down here, I'm going to click on financial statements. This part would be your income statement, also known as your profit and loss, but we're not going to look at that. We are going to look here at the balance sheet. Now, you would see there's a word assets. We know an asset is something that brings money into the business. Then current assets. If you take these definitions that I've sent you, you will see current assets are those assets that can be turned into cash within a 12-month period. And this will include cash and equivalent, market securities, account receivables, that is our debtors, people that needs to pay us money. Inventories, vendor and non-trade receivables, again, people that needs to pay us. And then we will have a total year of 122,491. Then we look at the current, non-current assets. These are our assets that we can turn into cash, but for a longer term. And as you see here, that would include the marketable securities, property, plant, and equipment, other non-current assets, and then we have the total non-current assets here. That is the total of that. And if we add these two together, we will have the total here. So I want you to understand this is the assets. So please write down the amount of 331,495 that you need to write down for me there, please. Keep that in mind. Then we're going to go down to our current liabilities. The current liabilities would be here. That will be the liabilities that we have to pay within a year. And here you will see what they are. And here's the total of our current liabilities. Then we go and look at the term non-current liabilities. These are liabilities that we need to pay longer than 12 months. And there's the total. And we add these together, we will see that it ends up here. Now you're seeing we've got the assets and liabilities. Then we go to a term also known as equity. Equity or capital is the money that we've invested into the company. And the first one is shareholders' equity. The shareholder equities would be the money invested by the shareholders into the company. That would be you and me, big companies. And we will see that that amount ends up to the total of 65,830. That's the total of the shareholders' equity that's being paid to us. So I want you to take note that 331,495 there. And do you see that that amount there and the amount here are equally the same? So what can we take here? And that our liabilities there with the total shareholders' equity adds up to the total liabilities and shareholder equities. So therefore, we can make the assumption that the assets of a company equals liabilities plus equity. that would include the shareholders' equity. And this is a basic equation that you need to understand in accounting on the balance sheet. Remember, accounting is the language of business. And there you have it. Just a basic concept to understand why we need to learn all of these terminologies, definitions. Next time, I will show you how, pardon me, how to invest on the stock exchange. A bit of an extra activity for you because we've learned all the terminology that we need. And with that, we're going to see ratios, how to work it out, to understand how to invest. This will be a fun activity to understand why we've learned all of these. Have a fun day. Bye.